Welcome back to Halftime Report on CNBC-TV18. Let's talk about numbers of TeamLease services. Muted said that came in Q1 FY26. Margins largely came in line with what the street was expecting. The stock did open up sharply in the green and then has seen a bit of a fall, but as of now holding on to gains of 3%. To talk about the outlook of the company, we have Ramani Dathi, the CFO at TeamLease Services, joining in with us. Ramani, good afternoon and thank you so much for joining us. Let's start by talking about the big point that's coming from the IT hiring trends. Now, TCS has obviously spoken about that layoffs coming in at 2% for its global workforce. What are you seeing in terms of IT hiring trends? Q1 as well as in Q2, how is it shaping up? Also, between permanent staffing and contract staffing, is there any change in terms of those trends in IT as well?
Yeah, sure. See, as far as IT is concerned, let's discuss in two parts, because on IT services, we are not seeing any kind of green shoots as of now. And now with reports like TCS going with aggressive layoffs, it can further go down because on contract employment, it has already got corrected substantially. So now the numbers that they're talking about are largely on full-time employees on their roles. So on IT services, as of now, we are not seeing any kind of indication in terms of pickup in hiring trends. So the current sluggishness may continue into this year as well. However, on the other side, the IT hirings in GCC captive companies and non-IT companies, because many non-tech companies are also setting up large tech teams for their internal digital projects and transformations, digitizations, those kind of aspects, they're all setting up their own large teams internally. So there the hirings are very good. So, but these numbers may not offset the job losses or the sluggishness of overall hiring on IT services. In terms of volume, they may not be able to offset. But for niche skilled people, there are still openings in GCCs and captives.
Mr. Ramani, just wanted to get a sense in terms of how exactly is AI affecting hirings, if that's the case as yet?
To some extent, but it's very difficult to kind of translate what exactly is the impact of AI on jobs, because it is increasing the productivity of existing base, and companies are also using AI tools as one of the major drivers for cost savings. And definitely it is having an impact, but if you ask me to translate that into either a number or saying the entire impact on hiring, is it solely because of AI? Definitely not, because the global IT headwinds, drop in overall discretionary IT capex, these are the main reasons for not having a pickup in IT hiring. And also AI to some extent, but I would put that in the least of the concerns right now. Mainly would be macro headwinds.
That's macro headwinds that you are citing as reasons for weakness. But, Ms. Dathi, what we also understand is that a lot of the blue-collar jobs are now in serious demand. And that is a growth opportunity for a lot of companies that are in verticals like this. Are you looking at this as an opportunity? Do you have any, revenue coming in from this vertical?
Definitely, because for us, the largest chunk of our business is mainly into grey collar and blue collar. White collar, we do under our specialized staffing segment, but that contributes to roughly about 5% of our revenue. But the rest of the business is mainly into these segments. And as you rightly mentioned, there we are seeing significant pickup in demand, and specific to blue collar industries like manufacturing, infrastructure, engineering, pharma. So there we are seeing very good demand in the coming quarters.
Could you give us a sense of what proportion of your business comes in from there, and what are the margins like in that business?
See, broadly for us, our largest segment is BFSI, but there it's largely grey collar and white collar. We don't do blue collar. BFSI contributes to about 22%, followed by FMCG, FMCD, retail, that's another 20%. Manufacturing is about 12%. Again, if we take industrial, engineering, pharma, these kind of sectors, that would be another 8 to 9%.
Ramani, are you still seeing a bit of a slowdown in that BFSI sector, which you were seeing in the last couple of quarters, or are we seeing a recovery here?
We are expecting a recovery in Q2 because this year the monsoon has been good and the festive season outlook is also good. So as of now, we are getting very good pickup in the open position specific to BFSI sector, because over the last 1 year, we have faced heavy headwinds in BFSI, both on NBFC side as well as last year, even on the bank side. So Q1 is also kind of flat as far as BFSI is concerned, but the open positions for the upcoming festive season in BFSI are good. So
Okay, GCC is currently 64% of your revenue. How much do you probably expect it to grow to? And in Q2, how many clients are you probably going to onboard from GCC?
I may not be able to give the exact number of clients because we are having very active discussions, and some of the largest GCC setups are under discussion for onboarding in the next few quarters. So this percentage this year we are targeting to end by about 70%, to take the current 64% to about 70% to the GCC share.
Okay, that's great. 70% will be the GCC share that will come in for the specialized staffing side as well. Thank you so much, Ramani, for speaking with us this afternoon. But on that note, we're going to slip into a very short break. We'll get you more on the markets and stock-specific action on the other side.